Hi, I'm Rick Van Wieren from the Van Wieren team at Remax Properties, and I'm joined here today by Mary Barkley, who's our team buyer specialist, and John Haney from Colorado Mortgage Company. And we're going to let John immediately jump in and talk to us about the forecast for the money markets going into 2022.
All right, so thanks, Rick. So John Haney, Colorado Mortgage Company, just kicking off my 19th year as a mortgage lender here in Colorado Springs. And so, of course, the number one question when it comes to financing is what's the rate, or what are rates doing? It's the number one question. It always has been, probably always will be. So I want to try to give a forecast for what we expect to happen this year. So the first thing we need to do is kind of understand a little bit of history. And the reason why I'm bringing this up is because it's all about the Fed. The Federal Reserve is going to be the most influential into the markets this year. So has anybody heard the word inflation lately? Inflation seems to be the most overused word that we have right now. Over the last 90 days is inflation, inflation, inflation. So inflation is real. And I'm going to go ahead and share my screen here. And we're going to learn a little about inflation and what we expect, how that's going to affect the markets. All right, so let's take a look here. All right, so first thing we need to understand is, a lot of people are saying, hey, we have 70s style inflation. And you know what? I think that's probably pretty accurate. You look back to when the Fed chair, Arthur Burns, was in charge, and we saw inflation in the late 70s go from 7% to 14%. Well, Paul Volcker has been known as the guy that broke the back of inflation. So what did he do? Well, he raised the federal funds rate from 11% to 20%. Well, prior to leading up to that, we saw mortgage interest rates go from 12% to 18%. That's a 6% increase during the time that Arthur Burns was in charge. Paul Volcker comes in, hikes the Fed funds rate from 11 to 20%. So what happened? Inflation fell off a cliff. It went from 14% to 5%. What did mortgage rates do? They went from 18% to 12%, right? So there was a 6% decline. So we had a 6% increase, a 6% decline. Well, what were the consequences of the Fed hiking rates? We saw the S&P fall 30% and we went into recession. All right, let's fast forward into the 90s. Alan Greenspan, we saw inflation go from 1.75 to 3.5%. Mortgage interest rates jumped from 7 to 8.5%. The Fed, what did he do? Alan Greenspan raised the Fed funds rate from 4.75 to 6.5. So that means we saw inflation dropped from 3.5 to 1%. Well, mortgage rates dropped 8.5 to 5.5%. We got a 3% drop in interest rates. What were the consequences? All right, we had the S&P down 50% and we went into recession. All right, here we are today. Jerome Powell in charge of the Fed. Right now, we've seen inflation run from 1.75 to 7%. Interest rates, 2.5 to 3.3. Now, I made this chart up about 2 weeks ago, and now these rates are actually even higher. We're probably closer to 3.75% today. What is the Fed going to do? Jerome Powell's come out and said, hey, we're going to start hiking interest rates, maybe as early as March. They're talking about going from 0% to 1% on the federal funds rate. What does that mean? Inflation should drop. What does that mean? Interest rates should decline as inflation declines. All right. What are the potential consequences? We've got stocks that are very expensive. The likelihood of seeing some kind of a downturn in the stock market is pretty high. Could it put us into recession? I think the probability is pretty high. So where we are today, about 3.75 on average. Where I think we're going, I don't think it's out of the question to see rates maybe hit 4, maybe slightly higher during Q1 and Q2. I think the second half of this year, I think we see interest rates drift back down to the low 3s, maybe the high 2s, but that's kind of what we're expecting. We look at history, it doesn't always repeat itself, but it oftentimes rhymes. And the last few times we've seen this rate hike cycle happen, we've seen mortgage interest rates go down. So that's my forecast.
Super. So a couple questions for you, if I may. One, so does that mean that you would recommend buyers wait, or is there other factors at play here?
Well, I can give you the rest of my forecast related to appreciation. Personally, I think we're going to see home price appreciation. It's slowing. That's a lot different than a lot of people would have you believe. We're not going backward. Backward is actual depreciation. Home values going down. The rate of appreciation we've seen the last 2 years in our market, somewhere between 15 to 18% a year for 2020, 2021. I think this year, I think we see it slow to a 8-9%. I think we're in the high single digits, which by any other stretch of a normal market, that's way outside normal. That's still, we're still going down the road really, really fast at an 8 or 9% appreciation rate. So to your question, do I think people should wait for rates to go down? Absolutely not. I think that if we see home prices go up 5% over the next 6 months, which could be very likely, then your cost of housing just goes up that much more. And the sooner you're able to lock it in, even though rates are a little bit higher now, you're still locking in your cost of housing, which is super important when home prices are expected to continue to increase. The other part of that is, if I'm right, and I'm going to give a high probability that rates are going to be lower later this year, there may be a refinance opportunity. So even if you lock in a higher rate today, you lock in your cost of housing, that doesn't mean you have to keep that mortgage forever.
Well, that's exactly what we're seeing in the market right now. I mean, inventory is extremely low. Here we are kind of 2/3 of the way through January, and we're still looking at fewer than 200 homes for sale within their existing homes in the city of Colorado Springs, or with a Colorado Springs mailing address. And to your point about pricing, I mean, my own prediction for 2022 is that we're going to be around 10% as far as overall appreciation in housing. But just in looking at pending sales alone, we're actually up 2% as far as the average price of pending homes relative to what closed in December.
So 2% increase in a month.
Yeah, in 1 month. So what feels like it should be a slowing rate of rate of appreciation is in fact even higher than where we were, because we did end up the year at about 18% as far as the overall increase in the median price December to December, and here we are going into January, and the pendings already show that we're at 2% in the first month, which is a 24% annualized number. So some serious numbers. So Mary, let me ask you a question. So how do you think that's going to affect your buyers, knowing kind of where we're at with all that?
Well, I appreciate the fact that John shared that it's not only the interest rates that buyers need to be concerned with, and certainly the price of homes is going up, and that is a concern. One question I have for you, John, is what are the different programs as far as loans available to buyers? Because I think sometimes people look at their credit scores or have had credit scores, they're discouraged, and they may not know of all the different types of options that are available to them.
Yeah, great question. So the bottom line is, if you're a veteran, you've got one of the best deals going with the VA home loan. Doesn't require any money down, usually getting interest rates that are far better than anything else on the market. Anything related to conventional financing or FHA financing, usually there's a minimum down payment of 3%. The more that you put down, the higher your credit score. There's lots of different factors, but basically the lower risk you are as a borrower, generally that means the better rates and terms that you're going to get. But I can tell you, even if you're pretty outside the box, maybe you've got some credit challenges, you just don't have a lot of money to put down, there are still some fantastic programs available. And even though rates are on the rise right now, these rates are still some of the best ever in history. And so it's still a very good time to purchase. There's lots of programs available out there.
So it sounds like there are challenges for buyers, but there's options for them, and getting the information, I think, is key ahead of time to make sure that they're kind of armed, so to speak, to be able to go into the offers, because we know that offers are getting accepted, and being prepared is important.
Mm-hmm. Oh, 100%. I think that one of the most important things a buyer can do is truly go through the underwriting process on their loan, understand every piece of the financing end of the purchase. Because most people, in my opinion, they tend to shop with their eyes and buy with their wallet. And if we can help them understand their wallet, because mortgages can be confusing. And so, if we take enough time to really go through and help people understand all the ins and outs, get them really confident in their numbers, I think that really will help them as they go into the marketplace in such a highly competitive market that we're seeing right now for buyers.
Well, I really like the strategic approach you're taking with this and looking at it in terms of how do you lock in now and still end up with a great rate longer term, and your insights are much appreciated in terms of the fact that we may actually see things going up initially, but then coming back down later in the year, and chances for people to kind of strategically work that into their favor. I mean, there's no doubt that even though we have very few houses for sale at any given time, there are tons of houses selling. And that's because they're popping on the market and back off again in very, very short order. And so for buyers to win in this market, it seems like one of the first things that they need to do is exactly what you just described, get to know where they stand on the loan. Getting their finances in order is a huge thing. But also you seeing, Mary, as far as ways buyers can get ready to be able to compete in this market.
Well, one of the things that I always recommend, and even though buyers are looking out maybe 3 to 6 months to buy, I always recommend getting them set up on MLS so they can kind of monitor the market to see what's available at what price, which will really help them to plan financially. I think people have an idea of how much homes cost here in Colorado Springs, but we all know that those have increased steadily over the last few years. But the good news is they are continuing to increase. And so they're getting more value for their home and won't have any problem selling. And equity is building up very quickly with the homes. And so I encourage them that even if they had to move after a year or 2 years, they still would be building up that equity and be well off financially. People have to move here. This is a great place to live. We all know that. We make the top 10 on best places to live consistently year after year. And certainly don't want to discourage people from moving here and looking at the prices. I like them to be able to talk to me personally instead of also just looking to see what's coming up on MLS, but to really discuss those prices and what their needs are. Sometimes people feel like they need 3-car garages and they in fact only need 2 large ones. So a lot of different variances as far as criteria of homes. And I really like to be able to help them and talk personally about those needs.
Well, and we know that a lot of buyers have a home to sell. And one of the things this time of year, especially with the supply chain issues we're having, I mean, one of the reasons inventory is so tight is because the builders can't keep up because they can't get everything they need, even build a house. But when you go to get your house ready to sell, you kind of run into some of the same things because sometimes that project that you didn't get done last year still isn't done this year. And when you actually get your bids, you discover that the contractors are scheduled out a ways. So this is not too early to get your finances in order, to get an understanding of how the market's going to work for the kind of house you're thinking that you want to buy, and getting your own house in order and ready to go. And we offer, of course, free market analysis to anybody who's thinking about selling. And it's not too early to get looking at that, because even though we might not be putting your house on the market tomorrow because you don't feel like you're ready, we want to give you a chance to know what your house might need to compete. This is a market, and correct me if I'm wrong here, Mary, but this is a market that very much the most turnkey run-ready homes are the ones that are getting the multiple offers and the top dollar. And sometimes if projects are neglected, the house will still sell, but you don't get near as much for it. And sometimes you end up with just the one offer, and it's not always as good as you'd like it to be, and so forth. John, one other question that I'd have for you is, do you have a couple strategies that you're seeing in the lending world that are working to help buyers win the day? Because we certainly have a ton of them in our industry, but given that you guys are usually the ones financing these, what do you see?
Well, we've got a couple of tricks up our sleeve, so to speak, as far as putting a buyer's offer, getting the best foot forward. Because at the end of the day, sometimes price isn't the only thing that the seller is looking for. And oftentimes, if we understand what is most important to the seller, hopefully we can, figure out a way to make an offer be attractive to a seller, especially when most offers are going to be, it's going to be a multiple offer situation. So that we have a few tricks up our sleeves, things like getting appraisal waivers, where there may be an opportunity to not require an appraisal at all on a property. Having their loan pre-underwritten, where it's actually been fully underwritten in advance of them ever going out and shopping for a home, so there's no questions about the approvability of the loan. And then we have a few other things that we can do depending on the seller's needs that for the right situation that could, again, just get the buyer's best offer out in front. So
if a buyer needs to get their house in order, so to speak, as far as their financing, how are they going to get a hold of you, John?
Yeah, so coloradomortgage.company is our home webpage. Our phone number, 719-357-6601. That's reaching out via email or our phone. Either way, we're here. We're ready to help. And most buyers will find that we have a very educational process in the way that we do things. And so usually getting started early is part of the big key to being ready when the time comes.
Cool. And Mary, how do you want buyers to get a hold of you?
The easiest way is by phone, 719-421-9360. And I answer my phone all day long into the evening. So I'm very easy to get a hold of that way. And then through email is mbarkley.9360@gmail.com.
Cool. And I can attest to the fact that she's easy to get a hold of, because I think she answers the phone pretty much every time I ever call her, which is often. And of course, I'm Rick Van Wieren, and to reach our team website, it's livingcoloradosprings.com. We've got a great home finding feature on there that also has our contact information for both Mary and myself. My own cell phone number is 719-331-7675, and look forward to hearing from you. Thanks so much for joining us today, and we hope you have a wonderful 2022.